What's going on, everybody? Today is Tuesday, November 29th, 2022. And in this video, I'll be giving you all a full chart breakdown. I'll be going in depth on a move that I took yesterday, which was Monday. This move was for a total of 139 pips of reward for risking 30 pips. A very hefty move, a 1 to 4 risk reward opportunity. So I'm going to be showing you my whole entire thought process and what led up to me taking sales on Gbpjpy. So all I want from you all to do is to like, subscribe to the channel, lock in, grab a pen, paper, take some notes, and let's get to it. And also for the future, you could comment below, let me know any topics, any tips, concerns, questions that you all would like to see on the future videos, and I got y'all. So daily time frame, right? And something that I like to do on a daily time frame, which helps out tremendously, is I like to highlight and just be aware of where we are on a higher time frame. That way when we approach these areas that I'm alert. So for instance, you can see up in here where we have this yellow zone here, this is an area where we had previous structure at. This was resistance. This was also a lower high point in this daily time frame. So knowing that we are approaching this area, I went ahead and took my zone, brought it all the way across as we were moving bullish during this time. That way when I get down to lower time frames, I can be aware that we are approaching this area. And as we look at this on a 4-hour, it looks so clean. You can see why it's so important. So we have previous areas of support here. We have resistance, and now we're approaching this area where we rejected it, and it's deemed as resistance still. So that was great to see. And moving forward, the market was flowing very nicely. As you can see, we have a bunch of highs and higher low points all throughout here. This is all a nice moving bullish market. We was respecting this trend line and continuing to flow. So as we got up in here is where things got a bit interesting. So I'm gonna go down to the 1 hour soon, but just focus in right up in here. So as you can see, the market never made a new high. After we rejected this zone, we continued to push back up and we formed a lower high point. So this lower high point was what led me to alert, be a bit aware of what's going on in the market, open my eyes, and kind of just focus in on what's going on here. So none of this is opportunities for me to take a trade. It's only for me to sit on my hands for a second and just be patient and just analyze what's going on. So the start of this week, Sunday, the market opened up with a lot of bearish volume, pushed all the way down, broke a previous area of support, broke the trend line. Great. So now we know that the market is shifting. We see some type of shift in momentum happening right up in here. So no matter what, whenever we're taking sells, we want to enter at areas of resistance. If we're taking buys, we enter at areas of support. So keeping that in mind, let me get this out of here. It's starting to annoy me. Keeping that in mind, we are waiting on a retracement from here on out. As we start to shift bearish, I want to see a retracement, and I want to be able to take an entry at a highly confluenced area. And that area will be here in this yellow zone. So the reason why I have this yellow zone here is because this is a 1 hour exhaustion area. So this is something also that I use to keep me on my toes and to be aware of where we are in the market at certain points. So that way I am not caught off guard by anything. So all we're doing is just building our checklist, finding little clues, marking them off. So lower high point now. So now we have a pullback. So during these times, whenever we have a nice flowing push and we have a nice retracement, I go ahead and find time frames that looks the cleanest to me to grab a fib. So this fib opportunity was given to me on the 30-minute time frame. I feel like that was the cleanest, and I drew it from point A to point B, bearish to bearish wick, which was here, and we got a 38.2 retracement. So what was unique about this move was that we had the 38.2 retracement, we had a 1 hour exhaustion zone that was being rejected. And the reason why I say being rejected, because if you analyze these candles, this is where candlestick analysis is very key. On a 30-minute time frame, you've seen this yellow circle, 1, 2, 3 back to back to back rejection candles up in here. This was great to see, going along with our bias of everything we analyzed from the top on down. So now we have rejection candles presenting in this 1 hour exhaustion zone where we have a 38.2 retracement. And then something also that is very important, which is why I had this arrow here. Look at the positioning of this moving average. This moving average is sloping down so hard. Look at this, like, pause. But look at this. very, very strongly angle of this slope. Whenever you see the moving average moving like this strong slope downward going along with our bias, we know that we are in good hands. There's a lot of power within this move, and this is pretty much a nice, indication that we have a strong area of resistance in a way, because a moving average is only a moving average. It's an average of price, and it's a form of resistance or support in a move. So knowing where we are in the market helped tremendously from the top down to now on the lower time frames, and we analyzing and taking every clue that we can. So keeping all of this in mind, now we're gonna go down to the 15, the 5, and the 3. As I go down to the 15, you can see how these candles are now presenting with a bit more of exhaustion on this 1 hour exhaustion area. As you see, back to back buyers exhaustion on these candles, lots of struggling within this area. So seeing all of this, I know that we're on this lower time frame. Things are going to be moving fast. So we got to be able to capitalize off of this on the super low time frame to be able to take a nice entry at our area of interest, which is in this yellow zone, and get a nice risk reward opportunity for it. So I'm going to be going down to the 5 minute now. And on the 5 minute time frame is where things start to show a bit more. We can see that the market is struggling. We have some nice engulfing patterns and things of that nature up in this area, but it's not as clean as I would like it to be. So I want to find an area of any type of support being broken for me to be able to take a sell. So even though we're on this lower time frame, we still can find areas of support or resistance if it was the other way around. And for this instance, on a 3 minute time frame, we have our minor area of support, which is right here, this orange line. So this orange line was where I was able to draw the line and basically be confident and know that we have a break of support. We have a pullback, which is a lower high point up in this area, which is our area of interest. And then we have a bearish confirmation, which is 1, 2, 3 bearish variation. So that right there, pairing all of this alone from the higher time frame, gave me the utmost confidence to take a trade in this area based off of this entry confirmation right here. If you all don't know about it, it's the 1, 2, 3 bearish variation. It's a 3 candle confirmation that is very powerful, very reliable in my experience, and I love taking entries with this confirmation. So entry was there off the confirmation. We have our stop loss, which was above the previous area of structure, above these wicks, out of the way of fluctuation, I'll say. And also knowing where we are on the 30 minute time frame, as we got this strong sloping moving average, this led me to be confident to put my stop loss in this area, being that we had exhaustion up here in an exhaustion zone, and also having the moving average backing us with this strong slope. This gave me confidence. I wasn't really worried. It was a 30 pip stop loss, which is usually my range of stop loss is 15, 20, 25, sometimes 30 for instances like this. So no matter what, I adjust my risk accordingly. 30 pips, 40 pips, it don't matter. No matter what, my risk reward is always going to be 3 times or more for my, from any move that I take. And TP was based off of the negative 27% on our fibs, which we used the negative 27% and also the 61.8 for my targets. And what played out a lot, what led to me, just having a learning moment for myself. I utilize exhaustion zones a lot, and this was something that I felt could be a nice teaching moment for someone that doesn't know about exhaustion zones. And that is being that we have, if you're looking up in here, right? So this was our low high point entry, right? The market came down. We were in about 120 something pips of profit or whatever, and we had a nice little retracement. So when that retracement happened, this is something that I feel like a lot of traders have to build and kind of grow when it comes to trusting your analysis and just trusting, where you are in the market, knowing your move. And me trusting my analysis led me to be able to hold this trade, not worry, and kind of just be confident in the move and trust that we hit our target, which we did. So seeing that we had an area of exhaustion up in here, I went ahead and took my zone and I draw it from here, because I want to grab from right up in here, this previous activity right here, and I want to cover the wicks, and I want to just bring it all the way across. So when I cover the wick, I'm probably going to just cover both of these candles right up in here, being that they're very close together, and bring it across. And it's funny because all up in this area, what do we have? Non-stop exhaustion. exhaustion on this candles, exhaustion, exhaustion on all of these candles, rejecting this area. So this was another opportunity for a re-entry. I didn't take a re-entry, being that I was already loaded up on my lot size when it came to this move. But this was another re-entry opportunity for someone that wanted to take entries up in here. This would have been the area of interest for me. But just knowing, how to apply these certain things like exhaustion zones and just going along with my strategy, trusting my move, trusting my analysis led me to be able to capitalize off of this move. I took it on Monday morning and it hit TP today, which is Tuesday morning, and we totaled out at 139 pips at 750. I utilize also QPs, which is something that I'll cover in another video. If you all want me to, you can let me know. You can also look it up. It's something that a lot of traders use. We use them for targets. Also, a lot of times when we have rejections, somewhere it could be a retracement and it could be an added area of Confluence when we have, let's say, a lower high point and we have it hitting a 38.2 or 61.8, and it's also hitting the 750 QP. All those things are reasons that we can, build our analysis on. So moving forward, this is the complete move that I caught, 139 pips. I just wanted to show you all and hope that you all can grow from this video. Hope someone was able to learn from this video. I hope all of you were able to learn and grow, and I hope this made sense. Any questions, any confusion, you can always comment below, and y'all let me know what other topics or any other type of methods that you all would want me to cover in the next future videos. I appreciate it. Let's get these pips.